It's only 6 slides. So it's all in there. So I don't know if you want me to kick off with that. And then when Claire joins, we can chat about other stuff.
Yeah, sure, if you wish.
Can I share screen?
Ashwari, can you just share the screen with Jacques?
Just try and see if you can share your screen now.
Good. Okay. All right. Right. Let's get this right here. There we go. Morning, everyone. I'm Jacques. I'm from Hereford. I see one or two of my clients in the room here. So if you've seen this before, if you've had my or heard my whole spiel before, then I'm so sorry. You're gonna hear it again. But I'm gonna give you a quick intro to myself, my company, and just a bit about how I approach financial planning. And it'll just give us or give you a little bit of a context in terms of when you're chatting to me and you're asking questions, what I can assist with, and what I'll use other experts for. So just to jump into it, a little short intro. Obviously, that's my name there. I was born and raised in Budastorp, a very, very small town. So I left there and I studied at Stellenbosch. I also studied through UNISA and Milpark. I did my LLB and my postgrad in financial planning on NQF 8 level. And I'm married to my beautiful wife, Chandra. I've got 2 kids, Mason and Damien. Damien turned 1 on this weekend, on the 30th. And yeah, my journey thus far has been in 2004. I did a senior paralegal diploma just to check out what law is about. And after that, I became a senior debt collector for the Overberg District Municipality. And I had in 2006 to 8, I had a restaurant and a shop and also an OK grocer. In 2009, at the age of 23, I closed the OK. Everyone knows what happened in 2009. I closed the OK, and also at the same time, I lost 2 friends. I lost my brother at the age of 27, and I lost my cousin at the age of 21 due to cancer. I left business and I went into farming for 8 months just to clear my head and get some perspective. And in 2009 December, I joined Hereford Group. And in that short December month, I did all my studies and accreditations and stuff while everyone was lying at the beach. But why did I join Hereford? So Hereford is quite I would say quite a unique company in that they approach financial planning a little bit different. So you might say, my broker, I've got a broker and he's a medical aid and he does short-term insurance and all those other things as well. But it's difficult to be a specialist in all those fields. So what we do at Hereford is we've broken it down, and we make sure that we work as a team in collaboration and synergy to provide our clients with a proper solution. And we have our offices in Canada is Kingsmere Financial Services. We've got about 3 offices in Canada. And then in South Africa, we have Hereford Group. We have Hereford Risk Management, which is our short-term arm. We have Hampshire Independent Brokers, which is our medical aid arm, and Seed Analytics, which is our investment and analytics arm. And then we also have down at the bottom, we have Hereford Group, basically just a copy of Hereford in Australia as well. So we assist clients, especially that decide to immigrate to Canada and Australia as well. So how does Hereford approach financial planning? And I'm just going to skip through this and just bring up everything. So we've broken it down into these areas. And when you start off at Hereford, you would only basically focus as a junior consultant on personal financial planning. Investment advice, you would be assisted by a more senior advisor, and then full-on estate planning, also assisted by your mentors and senior advisors. And then eventually you'll look at short healthcare and short-term insurance. So those two things, we as our financial advisors do not provide that advice. We have specialist healthcare advisors and then specialist short-term insurance advisors. Our employee benefits and business assurance, later on, you can specialize in there, but we've got specialists in that as well. So having done this for over a decade, I personally provide the personal financial planning, the investment advice and estate planning. And also I'm accredited pension fund. I do pension funds and employee benefits. And also I specialize in business assurance. So that is quite my speciality with my legal background. In terms of providing business owners with advice and structures, and then the assurances with that. So we basically provide all the services in financial planning except lend out money. That's one thing we at Hereford we don't do. So how do we approach financial planning? We break it down into basically three parts of a pillar of a pyramid, and it's significant that wealth protection is at the bottom of that pyramid, because if you don't have wealth protection, then a lot of things can go wrong, and all the wealth that you've created and trying to preserve can fall apart. So we start off with wealth protection, then we look at some wealth creation, and then we look at wealth preservation. And I like to look at these things and sometimes take away the word wealth and replace it with lifestyle. Because some clients might look at it and say, I don't really have wealth. I'm not wealthy. But I still say that you have a lifestyle that even if your income is 5,000 Rand a month, that 5,000 is still providing you with a particular lifestyle. And that's where it's very important for me to take every client, based on their circumstances. And if your 5,000 is providing you with a certain lifestyle, we need to protect that lifestyle. We need to then look at creating lifestyle for you and better lifestyle for you, and then preserve that lifestyle one day, at retirement as well. So this is my favorite slide. I'm taking like bits and pieces out of my proper slide. Is about 30 slides. This one's at about number 16, but no, not to bore you guys too much, but this is one of my favorite slides that I like to look at. And I always, when I do financial planning, I look at what am I doing for myself as well. Being married, 2 kids, and having a business and being economically active as well. I go through the same things that my clients do. So when you look at your age, I'm about 34, turning 35. So I'm married there, and I've already done the children thing. So I'm a little bit ahead, because I want to finish this line here, the supporting children part. I want to finish a bit earlier. That's why I started a little bit earlier. But this is a graph that shows that these are the things that you are going to go through in your lifetime. And the graph going up shows the amount of risk that you're going to take on. You're going to have mortgages. You're going to have to save for your kids' education. So we need to preserve or protect that. First of all, protect that wealth up to that part. And that's where we look at things like your healthcare, your income, your lifestyle protection type of stuff. And then at the end, we look at your wealth preservation. So when we start going here, we look at how we're going to preserve all that you've created. And in the middle here, we have to create wealth for retirement, and also for investments and business and property and those type of things. So I like to talk about a lot of lifestyle. What is the lifestyle output of the money that you're earning? So sometimes I sit with one of my clients, and just a while ago, before lockdown, I sat with one of my business owners, and he said to me, Jacques, you know what, it feels like I'm just working to pay bills and my policies and stuff. And I mean, that just breaks my heart when someone says that, because you shouldn't be just working for that. There should be some lifestyle output of your money, and that's what I do with my clients. And we have a look at what are you getting out of your money. So for example, at the age of 30, I got married, and me and my wife, we went to Europe. We toured Europe for a month, and at the age of 40, I'd like to, on our 10th anniversary, I'd like to do that again. So I want my money and my wealth to give me some lifestyle output. So that's a goal. And when I do planning, we put those goals in there so that you have something to look forward to in terms of lifestyle. Because it's pointless just going through life, saving for retirement. You have to enjoy uh, uh, um, life a bit, and that's when one of my favorite books is the 4 Hour Work Week. It's a wonderful book that talks about taking these shorter breaks and having these goals and having this lifestyle output on your money. So it's not all about just policies and things when you do financial planning. It's about looking at the individual and looking at those stages and where are we going to plot those goals and things that'll make it all worth it, and structure that accordingly. So one of my favorite slides, that one. So the process is basically what I do with my clients is identify your needs, and I do some calculations in terms of projections. We then evaluate what we've discussed, and I make some recommendations to you. And all my meetings, and those that are already here and they're my clients, they know that I will always make recommendations, and your plan is your plan. So you need to take ownership of your plan, and I can only make recommendations. And once you've decided what you want to implement, we'll implement those things. And most importantly, we need to track those things. It's senseless to have an investment and you don't know why you're investing for. So just to put money away every month, and you don't know why you're putting it away for, whether it's, are we building towards buying a property in a couple of years, or are we building towards a goal? If you don't have those things, you're going to get to a point where you're going to look at it and just say, why am I doing this? Why am I putting this money away every month? And you'll stop it, and you won't contribute and reach that goal that you actually initially started with. So tracking is very important, and that's why regular meetings is important with your financial advisor. So in this times, it's I hate using the word COVID-19 because it's everywhere and it's a buzzword and everyone's going on about it. But I've got 5 things that in any situation, whether it's COVID or whether it's if you're earning a salary, it's retrenchment that you're worried about one day, whatever it is, these 5 things personally have helped me through the years, and I share that with my clients. So the first thing is to have a budget, and if you have a business, it's your management cash flow statements. So that's where you have everything in one place, where you know exactly what's going into my business, what's going into my pocket, what's going out. And the reason for that is so that you can react very quickly. So when the whole lockdown thing came in, and we had uncertainty with regards to our business, can our business stay open, or are we going to work? Are we going to get our salaries? The first thing, for me, I also own a company that's it's called SA Grain Feed. So we are a feed producer. So we produce various grain feeds for animals. And, I've got a bunch of employees there. My role in the company at the moment is just from a financial and planning point. So it's more of an executive role and not an operations role. Thank you. Thank goodness for that. But when COVID hit, I had to make a decision personally as well. I had to make some choices. And from a business perspective, in terms of that company, I had to make some decisions. So I was able to make those decisions quite quickly because I was able to see exactly where we're spending money and where's our money coming from. And that allowed me to put some measures in place to cut some costs, to cut some things immediately, and see ourselves through this time. And we've managed to get to this point where, and I've just given the go ahead and clear for business to resume more or less as normal, and we didn't lay off any staff, and we didn't have to rely on any government funding or assistance. So I'm quite glad about that. But I was only able to do that because I had proper control over the finances. In my personal, on my personal side, I also had to look at my budget, and I had to see, what can I cut and what can I, reduce here. And a lot of the things I was able to do was because I knew exactly, what I had. So budget and management cash flow statements are very important. The next thing is team. To have a good team, have a good financial advisor on call, have an accountant, a legal person, and a good person at the bank. So normally your financial advisor would be able to help you, put you in contact with an accountant, legal and banking. I mean, my accountant, Claire, if I need anything, I'll immediately contact Claire and ask, what should I do? Legal, even though I have a legal background, I still bounce off ideas from other attorneys, especially when it comes to labor issues in my business. And then banking, I have my wonderful private banker, Ingrid, at Standard Bank. And, when I need something and I need to make changes very quickly, I call on these people to help me. And that's helped me a lot through COVID as well. So that's why I highly recommend getting that team and having their details in one place so you can quickly react and get hold of those people. Then the third thing is a rainy day fund or a war chest. So a rainy day fund is that fund that you keep money aside for when you have here that they're retrenching, or you get retrenched, or something happens, or you become disabled and you have a waiting period on your disability to pay out, or you struck with a dread disease, and you don't have the adequate cover in place to see you through a couple of months. So that rainy day fund is so vitally important. And in COVID, if you had a rainy day fund, it could have helped you a lot if you had a reduced salary, etc. War chests, I mean, for a business owner to have a war chest, have those funds available. If you have not just for situations like COVID, because I mean, this is quite a unique situation that has hit us. So a war chest you would normally have there if a competitor opens next door, and he opens and he's got new machinery and new technology, and now for you to play catch up, you might have to go into debt and put your business into debt, while at the same time you're losing a bit of market share as well, and that can lead to the downfall of your business. So to look at your war chest and how you're building your war chest while times are good is vitally important. So you have that ability to see you through these difficult times, or if challenging times come and you need to react quickly. Proper record keeping is also, it's one of the top things, to know where your stuff is. If you need to quickly get hold of your short-term insurance schedule when there's a claim, or there's something happened to one of your vehicles, or you had a break-in or whatever, you need to get hold of those documentation. Also for your personal side, if something happens to you, what I do with my clients is we have a look at your will. We can have a look at your living will. We look at the way if you have a trust, how's your trust structured? I had a conversation this morning with one of my clients, and about his policy, and his beneficiary on his policy is his trust. And I asked him, in these times and stuff, is everything right? And would your wife be able to access the funds if it pays into that trust account? And he actually says, no, we're still waiting from documents from the master's office, etc. I said, so what we do now is we make sure that the beneficiary on your policy is rather your wife and not your trust, until we make sure 100% that your wife can access those funds in your trust if those life insurance proceeds pay there. So we tick those boxes. We make sure that all your records and things are up to date and in one place, that if something happens and you need to access it, or a family, your wife or your family members need to access those records, they can easily do that. The last thing is compliance. Make sure your personal tax is up to date. Now, 1st of July, when tax season opens, I will be filing my tax returns and getting some money back from SARS. And that's also going to help me through these times, where business isn't normal as usual. So if you're a business owner as well, you need to make sure that your company tax, your VAT, your UIF, your workers' compensation, those things are all up to date. If your UIF wasn't up to date, you might have had issues now with claiming. If one of your workers, gets COVID while at work, workers' compensation fund needs to help. If it's not up to date, you're going to have issues. So all of these things, you need to make sure that your compliance is up to date, and it'll just help you through difficult times, when there are these challenges. So those 5 things, there's a lot of more things that we can look at to really make sure that your that you are bulletproof, but those 5 things, just to start with those 5 things will really help you. And that's me for now. Yeah. So back to you, Kim. Any questions? I'm happy to take questions.
I see Claire's back on the call. Claire, do you have anything to add?
Guys, sorry about the technical difficulties earlier. Thanks, Jacques. That was really, really thorough, and thanks for covering those couple of points of what to do now. Does anyone have any questions? Do they want to ask? You can either put them in the chat or just turn your mics on and then ask away. Or anyone got any similar stories to share of what they've done in terms of their policies and that?
No questions are usually good. I've covered it.
Yeah, I know, you know, in chatting to a lot of people, I know you guys also do a bit of the short-term side as well at Hereford. Not all insurance companies have been like forthcoming. You kind of have to go to them and ask. But a lot of them have, when you ask, reduced premiums in terms of, especially the car insurance, because like no one's using their car. People are saying, fill up your car last night. And it's like, yeah, I'm not quite sure where to put the extra petrol because I don't have any space because my car's still full. But I think it's, you know, a thing also with saving money that a lot of the insurance companies have been quite generous. I know, like, I think sometimes reduce premiums like 30% with that. And then I'm not sure whether the life insurance have also stepped up to the plate there, Jacques.
So yeah,
people with payment holidays and things, which is an option to explore. You don't want to be cancelling your policies, you know, especially in this kind of time with, yeah, COVID is, you know, not, it's a risk, but it's not a huge risk. But still, you don't really want to be cancelling policies, but there are ways around that.
Yeah. So we've had assistance from mainly like Liberty. So we do a lot of our risk cover via Liberty, specifically because of the relationship we've had with the company. We do have the brokerage side where we do allow or provide those other insurers products from them. But I know from Liberty, they've really been helpful in this time by providing the clients with some options. In terms of risk cover, the clients had an option to take a 6-month reduction in their premiums and benefits. So what that means is you can reduce your policy benefits to the minimum, which is 200 Rand, and but that will also reduce your benefits. And most of the companies that have done that have done a similar thing in terms of reducing benefits, reducing policies. So, so what happens is that the insurance companies would provide that reduction in benefits because obviously you can, I mean, they can't cover you for, you know, your full benefits, but stop your premium, especially with risk, because there's still that risk cover, that life insurance cover that needs to be paid out. So the risk is on the companies and mostly reassurers. So what they would do is after the 6-month period is done, you would just do a declaration of health and a COVID-19 declaration to say that you haven't been affected by it. If you haven't been affected by COVID, then they would just reinstate your policy, your premiums and your benefits, which is quite nice, without underwriting. So you don't have to go for medicals and tests and all of that again. Luckily, I've experienced most of my clients understand the value in their insurance and their life insurance, especially during these times, because the last thing you want to do is, leave your family in times like these, leave your family without, proper cover, or have yourself in a situation where you are disabled and you don't have that income protection paying out. So, and then on the investment side, we were able to assist, nicely is when you have unit trust investments, you can cancel those debit orders without penalties. which is quite nice. With the clients that have the older style retirement annuity products, which is your life retirement annuity products, they were able to get a 6-month premium holiday on those annuity products without incurring penalties. So yeah, we've had assistance from the insurance companies. What is interesting though is that we need to look at COVID. COVID is not that dangerous, like you said, Claire. It's not that dangerous for most people to get it, and they will most likely recover fully from it. With some people might have some lung issues afterwards, etc. But no, it's not a major thing. COVID is not the big risk. The big risk is the numbers of infections and the result impact on our health system. So what happens if this thing goes out of control, and we see the same figures that we saw in Italy and in the States, and we see that here, which is most likely the case because of a lot of people not adhering to the guidelines of social distancing, etc. And not just because they don't want to, because most, especially in the townships, they don't have a choice. Because that is their environment, that is how they need to operate, and they need to go to work, and they need to sit in taxis, and they don't have those options. So for them, if those numbers spike, most of the insurance companies get their reassurance from companies like Zurich, which is large international corporations which provide insurance companies, that's Liberty, Old Mutual, Sanlam, Discovery, with that insurance reassurance, so that the companies don't take all that risk on their books, on their balance sheets. So they would take your life insurance policy, for example. If you apply to Liberty for 10 million rand life cover, Liberty will most likely take 9 million of that and go to a reassurer, which is Zurich, and apply for cover with Zurich, and then insure you, but they've backed that insurance by a policy with a reassurance policy with Zurich. So the concern that we have is, if things get out of hand and we see a high increase in numbers here, your companies like Zurich might pull back new insurance policies. And that's a big risk to individuals out there. So if you don't have life cover, if you don't have those things in place, life cover, dread disease, disability cover, and that might be a concern for you, best to speak to your financial advisor now and get those things in place now. Because there is a possibility that if things go pear-shaped, that there is not life cover available, not just from companies like Liberty, but from all the companies, because the reassurers might close their doors. And that is a risk across the world, that something like that might happen. And you don't want to be in that position where you cannot get, it's like when you want short-term insurance, and in December you want short-term insurance, you can't get short-term insurance. So most short-term insurance companies don't provide new policies mid-December or in December, because they know people will have the whole year they won't have insurance, and then they want to go on holiday, and then they want to take out insurance. So the same thing happens when the risk is too high. Insurance companies might put in measures to say that we can't take on that risk, because if they take on that risk, they put everyone else at risk. So if insurance companies like, say, Santam would take on everyone during December, and the December, normally in December, your claims are quite high because there's break-ins and all of those things, and people go on holiday and lose everything. Then when they come into the next year, they have to reevaluate their insurance cost. They will have to evaluate higher. So the cost of insurance would become higher for everyone. And that's just what I'm talking about here. So there is some risk that we might, I'm not saying it's going to happen, and I'm not a doomsday prophet at all. I hope that things will be under control. I know that our government has made a lot of provisions. I just spoke to one of my clients this morning. He's one of the procurement guys for these hospitals, field hospitals, and he's saying that they've put a lot of hospitals in place. One of the spaces he's just signed off now is 350 beds that just came on. So there's enough beds, there's enough of those things. I'm not saying it, we're going to be in the dark ages here, but if things get worse, then that might happen where you don't have access to new insurance policies. So don't, wait for that to happen. Rather make sure you have your ducks in a row right now.
Thanks, Jacques. We've just got 3 minutes left. So I'm not sure if you can do this quickly, but Paul's just got a quick question. It's quite an interesting question. If you want to comment on, the worst case scenario regarding where the country is heading financially and how you would protect against it. So it's been a lot of Rand volatility we've seen, although the Rand I see is picking up now. It's back down to 17, which is below its pre-lockdown rate. And I've heard Currency Direct was saying they're expecting it to go back down to 16. If you have a final comment on that, we've just got like 2 minutes left.
Yeah, so I mean, we have a great opportunity now in South Africa to get access to cheap money, with all the international aid out there. So and they are going to take hold of it. The question is just, what are they going to do with it? Are we going to bail out SOEs? What are we going to do? Are we going to, steal half of it? Is the corruption going to be, running wild? We don't know. So South Africa's had their issues long before COVID came along. I mean, this year would have been a tough year for us. We all said this year would have been a tough year. And most of my clients would know when we've met last year as well, we did our reviews. I told you that this year we might see a recession. And I didn't know about COVID. So a recession was on the cards. A downgrade was on the cards. We have our other issues, and mostly it's policy issues that government needs to address. First thing is the SOEs, and this might have been a blessing for us, because now you look at SAA, for example. What are they going to do there? They might just scrap the whole thing, and that saves us a lot of money. This country will have a lot of money that they can use in other areas. A lot of money is being spent on infrastructure at the moment. Yes, our debt to GDP is going to rise, but we still have a relatively healthy debt to GDP ratio. So here, if we borrow more money, it's not a big issue. For us financially, we can borrow more money. We just need to get our economy back up and running. So the court case yesterday, with regards to the lockdown regulations, that's positive stuff, and that reinforces our judicial system, the power we have in our judicial system. Claire, you want to make me host?
Yeah.
I
don't know.
go beyond a minute.
Okay, yeah. If you've got a paid account, yeah. Can you do that?
Yes, you are a host.
Are you put on to host?
Yes, I did make Jacques a host now.
Is it okay? It's still okay.
Okay.
But yeah, I don't know if you want to reconnect or we.
Yeah, I think let's wrap up now, and then if people have other questions, we can contact you individually.
Right.
Thanks everyone for joining us. Thanks, Jacques. That was really thorough and a lot of information there. Some great tips and nuggets. And